Good morning and welcome to our Ashworth Wealth weekly market update. My name is Scott Thomas. Good to be with you this morning. There was a couple of things I wanted to go over this week, a couple of things that we watch quite closely. So we're watching the economy, we're watching what's going on with inflation and the job market. There's a couple of things I wanted to share with you this week that I thought was pretty interesting. The first thing that I wanted to share is on this graph, and it's really looking at the labor market and how the labor market has been over the last couple of years. And the one thing I wanted to really point out is on this graph, you can see that the gray line is the average of the job demand and what jobs were available in 2019. The diamond shape is where it is currently, and the peak, in other words, when there was the most amount of jobs available or the highest unemployment, is the blue line. So as we go back to 2022, when we had come out of COVID, we were starting to get back on our feet. That was the worst job market that we had had in probably 70 years, as far as how many jobs were available. There were so many people that were laid off. And slowly, as the economy has picked up steam, the labor market has tightened. So we're not quite back to where it was in 2019. There are obviously, if you look at healthcare, some of the social services, professional services, some of those sectors have not come back quite as strong as some of the others. But you look at transportation, retail trade, there's some that have come back and are at or exceeding what the levels were in 2019. So what does that mean? As the labor market tightens, that is a sign that there is inflation, but we don't think these numbers are to the point where it is of big concern. And I wanted to read a couple other things as well. So the job market is what I wanted to concentrate on first and kind of give you an idea of where we're at relative to where we were again back in 2022. The labor market has actually done quite well, and we're back to almost 2019 levels. Now, the other thing, and I'm going to go ahead and read this. This is an article I read earlier this week, and I just want to read kind of where the inflation numbers are as of right now. It says consumer prices in the United States picked up last month, a sign that inflation remains a persistent challenge. And we know that. We talked about that here a month or so ago, that inflation, even though it's much better than it was a year ago, is still not back to the levels they would like it to be. Prices rose 0.4% from January to February, higher than previously expected. They were hoping for about 3% for last month. The Labor Department said Tuesday, compared with a year earlier, consumer prices rose 3.2% last month, above January's 3.1% annual pace. Okay, and then it goes on and it talks about what factors in the economy, or what sectors of the economy the inflation is the worst. Excluding volatile food and energy prices, so-called core prices also climbed 0.4% from January to February, matching previous month's rise at a faster pace than is consistent with the Fed's 2% inflation target. So basically what that means is inflation, yes, it is much better than it was a year ago. Yes, the inflation or the interest rate hikes that we've had over the last year and a half have had the desired effect. It has not gotten it completely under control, and it is still a battle that they're waging. So what do we think that means for later this year? Even though inflation is not quite to the level that they would like it to be at, and it's been a little bit higher than it was anticipated over the last couple of months, we still think, and Chairman Powell came out here a couple of weeks ago again and said, yes, we're not to where we want to be, but we still feel like there will be interest rate declines or cuts later in the year. And we don't know how many. The market's already priced in 2 or 3 rate cuts for later this year, and it looks like we're still on target. So we're going to continue to watch inflation. We're going to continue to watch the monthly numbers. We're going to continue to watch the job market, and we'll continue to update those in our weekly updates. So hopefully that was good information. We still feel good about the economy going forward. Yes, we still think there's going to be some turmoil. We think there's going to be some ups and downs, especially with the election coming. But as of right now, inflation for the most part is under control. And like I said, we'll continue to watch it. And as we find out more as we get later into the year with interest rate cuts and what that will mean with mortgages and those kinds of things, we'll continue to update that. Again, please give us a call if you have any individual questions. We'd love to talk to you. And we'll see you again here in a couple of weeks. Thank you.